Hi, I'm Tom Rutkowski. I'm president of Innovative Retirement Strategies, and the purpose of this video is to debunk a popular myth of homeownership, and that is that you should pay off your home mortgage so that you can live debt-free in retirement. And the problem with that thinking, and why I would argue that you shouldn't do that, is the mortgage is the one expense that you've got that never changes in your life. The property taxes and the insurance on your home are going to increase over time as the value of that home increases. And unfortunately, by the time you reach retirement age, those expenses are going to basically displace what you were spending on the mortgage. And one of the things I hear very often from people nearing retirement age is that they can't afford to live in their homes any longer. Well, the reason for that is even though they've paid off their mortgages, the property taxes and the insurance have continued to go up each year. And once you get 30 years out in the future, you find that those expenses have basically displaced the mortgage. So people are paying as much as they were before, even though it's tied to the value of their home, and they get this sense that they can't afford to stay there any longer. So what I've done here is I've basically built just a little spreadsheet to try and model the cost of home ownership over the course of 30 years to include the mortgage, and 45 years to include 15 years of retirement. And if you look in the upper left corner, I've got just the basic inputs for a mortgage calculation. So the home price, the loan to value ratio, the loan term, and the interest rate that you're purchasing the house at. So in this case here, I've got a $200,000 house, which results in a $983 payment times 12 months is $11,807 per year, every year for 30 years. Now, what most people don't take into account is the insurance and the taxes, which are roughly about 2% of your home value every year forever. Different states probably have different rates. And this is all a spreadsheet that if you'd like, just comment below and I'll send you the spreadsheets. You can play with it. But you can see that insurance and taxes both increase over time. And you can see that in the graph here, the total cost of homeownership, all the bills added up together, is this blue line at the top. And it's the same in both graphs. The mortgage is the purple line that stays constant for 30 years. Just the property taxes alone and the mortgage are the orange and the red lines. And you can see that both of those increase over time and basically catch up to the mortgage payment by the time you reach 30 years. So in 30 years, if we look at the lower graph, you may get rid of the mortgage payment, that may drop to zero, but you've got two expenses that used to not be so much that are now equal to what you were paying on the mortgage. So basically you're paying twice as much on just the property taxes and insurance as you were on the mortgage alone earlier. The purple and green lines just represent the utilities and homeowners association tied to inflation rates. So if I can offer any advice to you, it is to not pay off your mortgage early. It doesn't give you any security. If you don't pay your taxes or your insurance, you can still lose your home. You know, if you don't think the county's going to foreclose on your house if you don't pay your taxes, you're incorrect. Take that from somebody who invests in tax lien certificates. So let your mortgage ride, refinance it if you have to, but make the best investments that you can all through your life, and preferably as early in your life as you can to get the full advantage of compounding. Over time, taxes and insurance will become a significant expense. So save as much as you can. Anyway, this is Tom Rutkowski, president of Innovative Retirement Strategies. The purpose of this video has been to debunk the common myth that you should pay off your mortgage and live debt-free. The best thing that you can do is save your money and let that mortgage ride and invest it. Thanks a lot for tuning in.